Welcome back to Fast Market. Kevin Hincks and Kevin Green back here now. It's time for our Likefolio segment. For that, I want to bring in the co-founder of Likefolio.com, Mr. Andy Swan, to the show. He's going to take us through the stock of the day, the stock of the week, the stock of the month. Andy, Nvidia, what is the Likefolio data saying about this? Boy, we were talking, Andy, about how this is going to affect a large group of stocks. Went some in different directions. What does Likefolio data say about Nvidia?
Yeah, well, we're going to say Nvidia is priced to perfection, and it will likely deliver better than perfection. This is a company that is, in the gold rush days, the people that got rich a lot of times were those that sold the picks and shovels. Well, we're in the AI gold rush, and Nvidia sells by far the best shovel in town. And there's just no other way to look at it. When you look at the spending of Amazon, Alphabet, Google, Facebook, you look at that CapEx spending over time, completely up and to the right, exponential growth over the last few quarters, continuing to grow. They've continued to commit more and more resources to these projects, and almost all of that money, or majority of that money, is flowing into the hands of Nvidia. So you can see exactly where their revenue is coming from. It's coming from the largest companies in the world. They have extreme insight into and visibility into future quarters' revenue. So when they raise guidance, they're not doing so thinking things will just continue to be, really good. They're doing so knowing things are going to continue to be really good. They're probably sandbagging the number a little bit as they move out into the future, but they have extraordinary visibility into the revenues into the future, unlike pretty much any company that we've ever seen on this type of growth curve. So I think Nvidia is in the driver's seat. When you look at them versus AMD or Intel, it's essentially a one-horse race. We do like AMD as a nice second-place stalker, but look, this market belongs to Nvidia, and all of the tailwinds are still very much there.
So, Andy, that's a nice graphic that you have when it comes to CapEx spend for some of those larger names. We have seen for this earnings season maybe a little bit of a deceleration when it comes to that CapEx spend. How can Nvidia kind of backfill that for the future if we start seeing maybe those Mag 7 or Mag 10 names start to slow down just a little bit when it comes to the spending and start putting up their own infrastructure?
Yeah, I think it really comes down to innovation and staying ahead of the curve. NVIDIA's in a really cool place, or a really strategic place, because when they come out with the next generation chip, like the Blackwell platform that they're pushing out, four times faster training, 30 times faster inference, real-time generative AI, they essentially pit these massive tech companies against each other. And so the moment one of them raises their CapEx spending and says, we're going for the new NVIDIA chips or data center processing solutions, the rest of them almost have to follow suit just to keep up. And so table stakes continue to rise, and NVIDIA is there to take the rake. And I think that's the strategy of the company going forward. I don't think that they're sitting back thinking we're just going to count our money and stop innovating. I think that they're reinvesting this windfall in a really strategic, really smart way to continue to expand the lead that they have over all of their competitors and force their customers to continue buying from them and continue accelerating their upgrade cycle.
You know, it's interesting, Andy, your graph showing the spending or the expenditures from Amazon, Alphabet, Microsoft, and Meta. Those are three companies that aren't hurting for money. And all of them came out and said, it's more spending, not less. The risk is to underspend now. So they're backing up everything that NVIDIA is putting out there. The only real risk is, can they get enough chips to these companies that they want to buy? Or like Microsoft talked about, having to go to AMD for chips because they couldn't get some of the chips. Is that a risk to this business, or these companies with unlimited CapEx budgets just going to keep this train rolling?
Yeah, I think they'll keep the demand rolling. The biggest risk to Nvidia is, that Wall Street or valuation gets so far ahead that it becomes impossible to catch up to. Eventually, that will happen. I don't think that it's this quarter, but eventually, I think that's what pops this. Or they have a supply or manufacturing disruption that does not allow them to fulfill these backlogged orders. And you think about, I believe it was within the last 3 months, certainly this year, that and Tesla's not even on the chart that we shared. Tesla wanted NVIDIA chips so badly that when NVIDIA was ready to deliver them, Tesla was not ready to receive them in terms of their physical location being prepared to receive them. So Elon Musk diverted the order to his AI project, XAI, so that Tesla could stay in the good graces of NVIDIA. That's how powerful NVIDIA's position is, that its customers will find ways to buy things they don't need just so that they can stay on NVIDIA's nice list instead of the naughty list.
Yeah, we haven't seen this kind of rush for a product since Cabbage Patch Kids back in the 90s, right? It's a Cabbage Patch Kids on a bigger scale. And so Christmas shopping going on here with NVIDIA chips. Andy Swan, thanks for coming on, as always, spending time with us on a very important day for NVIDIA and very important day for a large group of stocks. Have a great day, Andy.